Hello, welcome back to the channel. Here's another case on value-added tax, and now it's a very short one, and so it's just one sentence. A German authority of a city orders office materials, so stationery or so, from a trader in Belgium for 15,000 euro. And the question is, how is that treated under value-added tax? Well, you know what we do first. We first ask ourselves what happens here. And, well, to the right side of the border, we have the German city authority. On the other side of the border, we have the trader, and the trader sells something to Germany. This stationary material goes from Belgium to Germany, so we have an EU internal delivery case where good crosses the border. And you remember there were three testing steps. The first was, can the customer be a customer who has to pay the tax in his own country? Then we have an inter-community acquisition in the hands of the customer, and the trader will have an inter-community delivery at home, which is tax-free if he can prove what happens. If that's not the case, then we would have in a second step to test distance selling. If that also doesn't apply, then it would be third step treated as a regular inland case. So acquisition tax depends on, that is what you constantly, I hope, remember, depends on who the customer is. A full regularly taxed entrepreneur can always be asked to pay acquisition tax. For him, it's not additional bureaucracy. So a regular entrepreneur, fully taxed regularly, handing in a tax declaration will always be subject to acquisition tax. A complete idiot, so a private person, natural person without an enterprise, will never be charged with acquisition tax. And then you remember there is a strange group of people in between the two extremes, between the full experts and the full idiots. And you would probably call these the half idiots. These are those guys who could learn it, but don't do it at the moment because apart from for these acquisitions, they don't have to hand in any tax declaration for value-added tax. So these are people who could learn how to read and write, could learn how to hand in a tax declaration, but who do not have to do it until now. That is half entrepreneurs, because half entrepreneurs being in the half half in between half no half in on the way between full entrepreneur and full idiot. Half entrepreneur sounds a bit more polite than half idiot and conveys the same idea. So juridical persons, you remember, are half entrepreneurs, and that means with them it depends how much they buy from other states. If they buy much from other states, then one can demand reasonably that they learn how to hand in a tax declaration. If they only buy trivial amounts during the whole year, then not. So every member state can set a tolerance threshold. In Germany, the threshold is 12,500 euro for acquisitions from other member states. And now we see that the Belgian trader already sold us in the single transaction 15,000. So the city authority has clearly surpassed the threshold. By the way, it is usually the case, at least in Germany, that every state institution opts voluntarily for full qualification as taxpayer, so they opt for a value-added tax identification number, so that they renounce on the application of the threshold and usually become taxable from the first euro onwards. However, here we don't have to ask for acquisition for options or other things. Here it's fundamentally clear that this city authority will have to pay acquisition tax and that they are treated as a taxpayer. So the rest is routine. Now let's fill out our answer according to the testing scheme. we have to test for the buyer taxability under 1.1 number 5, acquisition tax. So, intra-community acquisition conditions, are they fulfilled? Number 1, yes, a good goes from Belgium to Germany. Number 2, the buyer is one of the persons who can pay acquisition tax. Letter B, juridical persons who do not have an enterprise or do not buy for the enterprise qualify as taxpayers too. Number 3, and naturally, as we have found out, the exception for half entrepreneurs should here probably be mentioned, that everybody sees we tested it and we came to the result it does not apply. This city authority is already treated as a full taxpayer because they exceeded the acquisition threshold. Number 3, the seller is an entrepreneur, it's a trader, and evidently not a small entrepreneur, otherwise we would have got some information on that. So we have to do with an inter-community acquisition. So we need to find out now where it is taxable, and 3D sentence 1 says at the end of the transfer, so where the good is at the end of the shipping, so in Germany. As usual for the acquirer, there is nearly no reasonable and possible tax exemption, so also not this time, so it's fully liable to tax. The tax base is the net amount, that's 15,000. The tax rate is probably 19%. Because we have no indicator that office material of any kind should be taxed with 7% under the reduced rate of Germany. So the tax is 2,850, I hope. And the taxpayer is the city as acquirer. The arisal of the tax is when the invoice is issued, 31 number 6. However, if no invoice ever comes, then at latest at the end of the first full calendar month after the delivery has been made. Here are no dates given, so we can't fill that out. And there is nothing special, and the peculiarity or concerning input tax, we have a very sad message to the city. Input tax can only be granted to somebody who runs an enterprise, and the city doesn't do that. It's just an authority, so they just do state activities, and what they buy is basically private, so non-entrepreneurial consume. So no input tax. Here the acquisition tax is for the acquirer a definitive financial burden. On the side of the seller, taxability 1.1 number 1, it's a delivery. The place of the delivery is where the shipping begins. That's in Belgium. Taxable in Belgium under 1.1 number 1. Is there a tax exemption? The answer is it should be an intra-community delivery if we have on the other side an intra-community acquisition. So let's test the conditions. Number 1, the good crosses the border inside the EU, yes. Number 2, the buyer is one of the right persons, it's a juridical person. Number 3, the buyer also is subject to acquisition tax. Here you see, by the way, from this example, why this number 3 is an additional condition. There are buyers who might be juridical persons but are below the threshold and did not opt for taxpayership. So then the buyer would be a juridical person, however, would have a kind of status like a private person. So you need to test those. And here our city, yes, they have to pay acquisition tax, and that entitles the seller to a tax exemption, actually. Number 4, we can assume that the buyer, if the city authorities are not gone completely mad, they use their value-added tax number of Germany during the transaction. So everything is proven. It is an inter-community delivery, so it's tax-free. If the Belgian trader hands in the recapitulative statement in Belgium, giving all the proper information inside, so the net amount and the VID identification number of the city, so that the German tax authorities get the information automatically from the Belgians and can look up if the city authority didn't forget to pay the acquisition tax. The tax base is the net amount as on the other side. Then we have the recapitulative statement naturally, and we also have the usual remark, which I shorten down strongly here, that in spite of the tax exemption, the deliverer keeps the right to deduct own input tax for his or her own material or services or whatever input was connected with that tax-free intra-community delivery on his side. Yeah, and I said this case was a small one, and indeed it was a small and quick one. So thank you for listening, and I hope to see you soon again. Have a nice day, and come back soon to this channel. Okay, ciao.